I met with a new client yesterday and told him something that completely blew his mind. He's buying a new home in the next couple of weeks, and his initial plan was to rent out his current home because he didn't want to sell his property and pay a bunch of capital gains taxes on it. He's lived in his current home for about 15 years, paid about $250,000 for it, and it's currently worth over $500,000. So, in his mind, he thought he was going to have to pay taxes on the $250,000 of gain, but he wasn't aware of something called a Section 121 exclusion. A Section 121 exclusion means that you can sell your primary residence and exclude up to $250,000 of gains from being taxed if you're single, $500,000 if you're married. So instead of paying capital gains taxes on $250,000, which for him would have been about 20% or $50,000, he's going to pay $0 in taxes if he sells that property. To qualify for this exclusion, you have to pass the ownership and use test, which says that you have to have lived in and owned the property for at least 2 out of the last 5 years. And once again, it does have to be your primary residence. So that means he can technically rent out this property for 3 years starting today and still qualify for the exclusion.